everybody. This is Robert Chadwick with American Mortgages. Thank you for joining us for our another webinar. Today, we are happy to have Lucas Ramos from Steadily Insurance. Steadily Insurance is one of our vetted insurance partner. Actually, they are our only vetted insurance partner, and they help provide insurance for our foreign national and U.S. expat mortgage clients when they are requiring this type of insurance. So, Lucas, perhaps maybe you could introduce yourself, what Steadily does, what your background is, and then we'll go into the slides.
Yes, excited to be here with each and every one of you. So good evening, everyone, and thank you for having me this evening. Again, my name is Lucas Ramos. I am a team lead with Steadily Insurance. I am probably one of the first agents that was with the company when they first opened up, and I'm still here. My specialty is working with investors and property owners that rent out their properties, basically. I also work with property owners that also occupy their own properties across the country and globally. So I've been in the insurance industry for almost 20 years now, so coming to you with a lot of knowledge and a lot of information this evening.
Okay, you can go into your slides now if you'd like, Lucas, and just I'll be controlling the slides. So if you just tell me when to move forward, I will follow your direction.
Yeah, so this first slide is just a disclaimer letting you know that the insurance coverage that we're going to be discussing this evening is just a broad stroke. It's not specific to any one policy. Any one policy is basically based on your specific need and what you're going to be doing with your investment property. And as it says on this slide, we offer right now, Steadily is #1 in the US for offering fast and affordable insurance for rental properties in all 50 states. That's a great one. Landlord insurance. Landlord insurance is what each and every one of you will need when you choose to purchase a dwelling or a home and you choose to rent it out and not occupy it yourself. Basically, it's going to cover you from anywhere from your legal liabilities to the actual dwelling, which is your house itself, for any damages, and also protects you against any of the possible injuries that your tenant can have that you're renting the property to. You have two different types of policies, right? You have your homeowners insurance policy and you have your landlord insurance policy. A homeowners insurance policy is basically when you buy a house or you buy a home and you choose to occupy it yourself. You're not renting it out. That is different from basically getting a landlord policy in place where you buy a home and you're renting out the property to either a tenant, family member, or you're using it for an investment purpose. Compared to renter's insurance. So renter's insurance is something that your tenants would get in place. So when you own your investment property and you choose to rent it out, you rent it to a tenant. At that point, your tenant would get what's called renter's insurance to protect their own personal belongings within the home. And it also does come with some liability coverage. And the best advice that I can give for each and every one of you as an investor, when you buy your investment property and you're renting it out, it's pretty safe practice to always require your tenant to go get a renter's policy in place and make it as part of your lease agreement and a requirement. Landlord insurance policies are very similar, just like it states, to primary home insurance policies, from a standpoint that a home insurance, or it's all hazard insurance, right? They're all called hazard insurance policies. So they'll cover the home for things like fire, windstorm, weather-related damage, vandalism, theft. But they do differ, right? You cannot get a landlord insurance policy in place when you're the one occupying your own home, right? It's like trying to file a liability claim against yourself, which you can't do. So landlord insurance is always needed when you're going to rent out the property versus primary home insurance. Another good slide. Types of water damage that most, if not all, insurance policies will cover, except for flood. Accidental water damage, right? If you are trying to fix a pipe in your home and you break the pipe trying to fix it and you get a leak from that, that's accidental. If you have long-term water damage, that is a case-by-case scenario with a lot of insurance carriers. If they feel like it's a long-term water damage where something that could have been prevented from you being negligent, you might have an issue with getting that covered. But if it's something that was accidental, again, that's why you have the insurance, then that would be covered. Flood insurance is a separate policy. So one of the misconceptions about landlord insurance or home insurance is that if we have a flood, does that my policy cover this? And that answer would be no. You would need a separate flood insurance policy. And these are the two most used forms for landlord insurance. So really quickly, I'll discuss homeowners as well. When you have a homeowners insurance policy, if you look to the left side of this slide, a homeowners insurance policy would have a number H, a letter H in front of it, and particularly it would be an HO3. When you have a landlord policy, it's considered your home is considered a dwelling. So it usually starts with a D. Um, a DP1 is a very basic landlord policy. There's a lot of exclusions in this policy. And basically anything that is named, like physically named in your policy would be the only thing that would be covered. Everything else is absolutely excluded from coverage. Now, if you go down to the second one, a DP3, that is considered a open peril or an all perils policy, meaning everything in the policy would be covered. And then the only thing that would be excluded is what's listed in the exclusions. To give you the best advice that I can give you, even on my own investment properties, when it's going into your portfolio, it's a long-term investment, it is always best to get a DP3 policy in place. Some of the basic things that both policies do cover or will provide is liability coverage for injury, your loss of rental income if there's a claim and your tenant can't live there and you have to get the house fixed, and any detached structures that are listed on the policy. And a detached structure, real quick, is something that is not attached to the home. So if you have a storage or a shed, a cabana, something in the backyard that is not attached to the house, that would be considered a detached structure that would be covered on your policies. Again, just like I went through a little bit earlier, things insurance policies do not cover your tenant belongings. Your tenant belongings would be covered under the renter's insurance, right? Because you're renting out the home to a tenant. The personal belongings don't belong to us as the property owner or as the landlord. So the personal belongings would be covered under a renter's insurance policy. Normal wear and tear, we can't file insurance claims for things that break down because they're old, right? So if you have let's see, an AC system or an HVAC system for your air conditioning, and it's 25 years old and it decides to break down, you can't file an insurance claim for that. That's more like a home warranty type thing. Tenants damaging your belongings, right? So a tenant, when they rent the home, is like an extension of us. So that wouldn't be covered, right? So that's why we get security deposits when we rent out the home to a tenant to cover that. And then another exclusion that's on every insurance policy: terrorism, war, anything, any disease-related things. Those are definitely wouldn't be covered on any insurance policy for a dwelling or primary home. And this is definitely varies. How much does insurance cost? I get this, how much does it cost? I get this question a lot. I am licensed and appointed in all 50 states. And these premiums you see on this screen are actually varying right now across all 50 states in the US. So if it's a standard home, maybe under 1,200 square feet, it's a long-term rental, built within the last 15 years, you would basically see a premium maybe for about $1,100 or less. Or you would see if it's a short-term rental where you're renting it out 6 months or less. Anything under 6 months would be a short-term rental. Anything over 6 months would be a long-term rental in the insurance industry. But that's the premium you would see for a standard size home. Again, it's really dependent on a lot of different factors: the size of the home, the occupancy of the home, the rebuild cost of the home, and the location, where it's located at, in which state in the US or abroad. Another good slide, which I actually absolutely love this one. A big misconception with deductibles that investment people have or property owners have is that when you have a deductible on your insurance policy, that's something you would have to pay first in order for the insurance company to pay the rest. So that is actually a very big myth. So let's say if you had, and I look at the slide here, let's say if you did have a $10,000 claim and you have a $1,000 deductible on your insurance policy, well, the insurance company is going to pay out the claim minus your deductible. There's not something that you would physically have to pay first. So in other words, so if it's a $10,000 claim, insurance company is going to minus your $1,000 deductible and send you the check for the $9,000, and then you can go ahead and fix whatever needs to be fixed as part of the claims process. And these are Airbnb and VRBO. I don't know if everyone is familiar with what that is, but that is when it's very big here in all 50 states in the US and abroad, actually. And these are short-term rental policies. And these are people who choose to contract or owners who choose to contract with the company Airbnb or VRBO. Your Do they have their own insurance policies? Yes, but their insurance policies do not provide any coverage for the actual structure, damage to the structure of your home or anything like that. What they do provide is while you're using their program is they're going to provide you liability coverage while it's being rented when you actually have it occupied through their program with someone for the short term, and also for any personal property. Because when you have a short-term rental and you're renting it out, 9 out of 10 times you own the personal property in that short-term rental because you're letting other people use it as such for short-term Airbnb and VRBO. But don't mistake that from not actually getting your dwelling or your landlord insurance in place. You still need to have that in place, even if you're contracting with Airbnb or VRBO. What kind of insurance is for a midterm rental? And the term midterm rental is actually a term that a lot of investors and property owners use, including myself outside of insurance talk. We use that. Technically, in the insurance industry, there is no such thing as a midterm rental policy. Depending on your occupancy and how you're renting out the house, that's going to determine if you're going to get a long-term or a short-term rental, right? So rule of thumb that you can basically say 95%, depending on the carrier, but a big rule of thumb is if your lease agreements with your tenants are under 6 months, right? 6 months or less, or 5 months and 30 days or 27 days, whatever that number chooses to be, then that would be a short-term rental policy. If you're 6 months or more on a lease, 6 months or 12 months, then you would go on a long-term rental policy to make sure that you're not exposed and you're insuring it the right way. And your coverages, and I like how they put midterm rentals here. It's funny. Your coverages for your long-term or short-term rentals are going to be pretty standard across the industry with a DP3. DP1s don't provide coverage. So one of the big misconceptions, again, I'm going to touch on from the previous slide, vandalism and mischief is one of those biggest exclusions on a basic DP1. The only time you'll get vandalism and mischief that is actually included in the policy is on a DP3, and we can discuss that further on the Q&A. But these are basic, these are the standard coverages that you would get. Your dwelling coverage is actually your house, the structure, damage for fire, weather-related damage, water damage, anything that applies to that. Vandalism and mischief on a DP3, someone tries to break in the home and they get in there and vandalize it, or they couldn't, even if they couldn't get into the actual house, they vandalize the front door, they break the locks, things like that. And then the bed bug coverage would be more for something for short-term rental because you have so many different people going in and out and the leases are a lot less. That's a good coverage to have on a DP3. God forbid you do wind up getting bed bugs in the house. And then liability coverage is broad. It's offered on a long-term or a short-term rental policy, no matter how you're occupying it. And again, we are rated #1 right now in the US in all 50 states for the fastest and most affordable insurance for all types of rental properties, because you can have several different investment properties. They can be anywhere from a single family all the way to an apartment building. And you can go online. That's one of the things that we're really trying to make this a very easy process. You can go online to the Steadily Insurance website, and you can basically, the first thing you're going to see is punch in the address or type in the address for your investment property that you own, and then it'll start providing you a lot of information. You'll have to answer a few more questions, but it's pretty quick. You can probably get a quote within 2 to 3 minutes, and then get connected with one of my agents. And touching on what we just discussed, your investment property can be anywhere from a single family home, meaning that it's one unit, you're only renting it out to one person. If you can own a condo. Condo units typically have a condo policy, which can still go on a DP3 or DP1. However, on condo policies, you're not responsible for the exterior, right? You're not responsible for the roof, and you're not responsible for any damage to the outside of the siding. On a condo policy, you would only be responsible from the drywall or your studs, and from the inside of the unit in, and that is it. Manufactured homes are we also provide coverage for, which is, if you're not familiar with that term, it's a mobile home, and that's very big in the US as well. A lot of people are mobile home owners and use them as rental properties. Apartment buildings, anywhere from anything that's 5 units, so which means it's not a 4-family, a 3-family, a 2-family, or a single family. Anything that's 5 or above, that you can have 5 different families living in there, would be under an apartment building. So anything 5 units and above, all the way up to 1,000 units if you have an apartment building that big. We basically provide coverage for that. And multifamily, that would be your quadplex, which is a 4-family, a triplex, which is a 3-family, a duplex, which is your 2-family, and a single family, that's your multifamily. And then that last one is if you're building a property, whether you're building an investment property to rent out, or you're building a home for your primary occupant. You're occupying it yourself. We do cover and offer vacant, builder's risk policies, new construction policies, or even if you're going to buy a house to renovate it and then rent it out as a long-term or short-term rental, we do offer those policies as well. And yes, if any of you are not familiar with Trustpilot is one of the biggest review companies in the US right now in all 50 states. So if you go to actual Trustpilot, you can see our reviews. These are from real-time, real customers that we have accumulated since we started up 3 years ago. So I would advise all of you to check that out too and see what the reviews look like on Trustpilot. And this is for any of you that would like to become a brand ambassador and kind of like a partner, right? Where you can become an ambassador. We'll send you an affiliate link where you can start generating income for promoting Steadily for us. And for more information on that, link or that URL on the bottom there, if you remember that, or you can write that down. Maybe I might put that in the chat as well. But you can click on that if you want to become an affiliate of Steadily. We would love to have you. And that's where you can do it. You can get a quote online in minutes, and it's landsandleases.steadily.part. No, that's right there, steadilypartner.com. I didn't see that one. That's good.
Okay, well, yeah, thank you. And I think, we'll go to the questions and answers at the end, but super, super informative. A couple things that I took from this. So in the US, as you're likely aware, all mortgage lenders will require something called hazard insurance. And hazard insurance is the replacement cost of the property in case something will happen. But I think a lot of the things that you brought up were additional to this hazard insurance that would benefit real estate investors or property owners to, whether it's going to be mitigating them from, lawsuits or, protecting the property, etc. Super good information. One question I had myself, when you were talking about the premiums, and it was about $1,000 a month or so, was that an annual premium or was that monthly premium on average?
That would be an annual premium. Great
Okay.
question.
It's quite affordable then.
Yes,
Yeah.
definitely affordable.
Okay.
Absolutely.
Okay, perfect. And I thought it was great too how you touched on bed bugs, because you're constantly hearing that in the news now. There's a bed bug problem in this state or this country or whatever. So very, very, very interesting stuff. And we'll get back and do the questions and answers. So if anybody has any questions on what Steadily Insurance can provide, please put it in the chat section of the webinar. Also, in that chat section, there are links to schedule free consultation with both Steadily and with American Mortgages. So if you want to sign up, you have questions on either insurance or mortgages, please feel free to do that. It'll pop into the chat every so often. Right now, I will do a quick coverage of what American Mortgages is able to offer to foreign investors and U.S. expats living abroad, earning their income abroad. Again, 100% of our clients are living and working outside of the U.S., but obtaining U.S. mortgages. So the general mortgage overview for all of our loans, there is no U.S. credit required. No AUM, excuse me, no AUM, which means there's no requirement for you to put a minimum deposit in the bank where you would be obtaining the mortgage loan. Foreign income, because all of our clients are living and working abroad, absolutely allowed. We have loan programs in all 50 states. Excuse me. If you're a foreign national, so you're not a U.S. citizen, not holding a green card, you can get up to 75% financing in all 50 states. If you're a U.S. expat, we try to make it just as if you were to walk into a bank in the US. You can get up to 80% with the same coverage and programs. Normally, once you submit your documents, we can give you a loan approval within 72 hours. This is super crucial if you're looking to purchase a property, because before you put an offer in, you need to have a pre-approval letter from a lender. We'll issue you that letter. When you put your offer in on your property, you also submit that lender. And the seller and the seller's agent on that side is fully aware that you are pre-approved for a mortgage loan. We'll make your offer absolutely much more, viewed in favor of perhaps other offers. On average, we have closing times between 30 to 45 days. You do not need to go to the US in order to sign your closing documents. We've been doing this for a long time now. We have at least a dozen different ways where you can close your mortgage in a very convenient, easy way in the country that you're living in. Purchase, refinance, pulling cash out or equity releases, absolutely possible. 30-year amortization regardless of age. Very unique to the US. The mortgage tenure is not limited to the age of the borrower. Meaning that if you're not, excuse me, if you're 19 or 99, you can still qualify for a 30-year mortgage. And the reason behind that is quite simple. In the US, you cannot discriminate against anything, age, sex, religion, and the age for a mortgage is the same. We have 10-year interest onlys, which are fixed for a 10-year period, convert into a 30-year principal and interest loan, so you have a total 40-year tenure. Perfect. Well, interest rates are a little bit higher now to where you're still able to see some fantastic yields. And then at some point, you can either choose to refinance when rates go down, or at least you have the comfort of knowing that this loan is fixed for a long period of time. We have loan programs that are based on common sense underwriting. Just as you would underwrite a commercial property, you would underwrite it off of the cash flow. We do the same thing for rental properties, meaning that you do not need to provide your personal income documentation. You can do this with going off of only the rental income of the property. Absolutely fantastic program. What we are very, very proud of is 97% of the loan applications that we submit are actually approved. And what that means is, after speaking with one of our loan officers, which are based all over the world, if they tell you, yes, I think this is something we can do, they take the application, we submit it. it's almost guaranteed to get approved. Normally, if there is an issue, it's an issue with the property and not the borrower's profile. We have loan officers all around the world. So when you go on to our calendar, so if you click on the link to be able to talk with one of the American Mortgages loan officers, it is a 24/7 calendar in a variety of languages. So we're in your time zone and we speak your language. So the loan programs that we have, I'll just kind of briefly go through these. If anybody has any specific questions, we can answer it in the chat, or you can also talk to one of our loan officers. So this is our most popular program, and this is the one that I said is a common sense underwriting. It's called our American Mortgages Express or AM Express Plus. No personal income documents are required. You're going to qualify only on the rental income of the property, and it's normally a 1-for-1. And I'll go over that in an example. No U.S. credit is required. Loan amounts as low as $150,000 with a loan to value of 75%, meaning that you only need to look at property values of $200,000 plus in order to qualify for this program. It can be used for both purchases, refinance, and also equity release. So this is how it works. It's quite simple and straightforward, very easy to understand. If you have a gross rental income of, as an example, $2,400, your mortgage payments include taxes, principal, and insurance, is $2,400. The loan qualifies. This is absolutely fantastic. And just for sake of an example, in the event that the rent does not cover as much as the mortgage payment would be, it does not mean that the loan does not qualify. All it means is the LTV maybe needs to be adjusted. So either way, this is almost an assurance that you will be able to get this loan at a very, very market rate. So our Investor Plus is no tax returns required. So rather than using tax returns, and because this is mainly done, we're doing loans from clients that are from Sydney all the way to Shanghai and in between. If our underwriting was having to go through the taxes and the tax filings of a variety of countries, it would almost be impossible. So what we do is, rather than asking for tax returns or NOAs or W-2s or whatever it may be, we're going to use a letter from your accountant if you're self-employed, or a letter from your employer if you're employed. And that letter just states 2 years of income and current year to date. Quite simple, quite straightforward, and actually a great way for you to document your income without having to go through multiple hassles. Again, for all of our programs, no U.S. credit is required. Minimum loan amount, $150,000. In this loan program, we can go up to $3 million. No minimum deposit, meaning that there's no AUM required. And again, 30 to 45-day closing in the country you're living in. How to show this, or the example of this, it's off of a debt to income ratio based off of the gross income that's showing on that letter. It has to be 47% or below. So our high net worth mortgage program, this is becoming increasingly popular, especially with our private bank clients. High net worth individuals have normally very complicated tax returns, multiple jurisdictions. They may not actually show what their true serviceability of debt is. So what we do is, rather than going off of tax returns or even an income letter, we go off of their liquid portfolio. Liquid portfolio, cash, stocks, bonds, whatever is something that could be liquidated, that could potentially be used for income calculation. What we do is we take 2 months of those statements. There is no encumbrance of those assets. The only encumbrance is onto the actual property that you're buying or refinancing. All we're using is these statements to qualify for the loan. The day that the loan closes, you can trade it, you can sell it, you can do whatever you choose. This is merely only to show what the person's net worth is if they were to liquidate that asset and be able to pay this mortgage. This loan program starts at a minimum of $3 million and can go up as high as 100 million plus if that's required. So how that would work is, it's a very interesting calculation. We take the 2-month average of, say, a $5 million portfolio over the fixed term of the loan. Say in this case it's 5 years. It would give you an average income of $83,000 approximately. As long as your mortgage payment is below that, the loan will qualify. And again, the great thing about this is you're using those assets only to qualify for the loan, but there's no encumbrance or no requirement for you to move that to any other account or et cetera. If you're a US expat, we try to make this like you're walking into the bank and working in the bank. No W-2 is required. We realize that you're earning your income in foreign dollars. Probably 20% of the business that we get every month is a US expat that went to a local bank or even an international US bank, and then they find out as they're at the very end, wait a minute, you guys are earning your income in Hong Kong dollars or euros. Sorry, we can't accept that. Our loan programs are specific. 100% of our clients fall into the category of not living and working in the US. So we've made these programs exactly like you were living in the US. 2 years of tax returns, pay stubs, bank statements, exactly what you would provide for a US loan, exact same loan programs, and exact same pricing. There is no premium just because you're living abroad. So how it works is, again, it's on a debt to income ratio of 47%. So as long as you can qualify for that, just as you would qualify in the US, the loan should be fine. AM Student Plus loan, and then maybe we can cover this too with Steadily, but if you have children that are going to be studying in the US, you'll want them living in the dormitories. You want to buy them a property that, maybe after they finish school that they can keep. You are going to qualify only on the rental income, the potential rental income of the property, even though your child will actually be living in that property. This is a really great program. Happy to discuss this further. It also, you can add your child to this loan, helps them build US credit, which is paramount, I think, once they graduate from school and choose to perhaps stay and live and work in the US. Again, how this works is very similar to the Express Plus loan. It's going off of the projected rental income of the property. So we have an office in Texas, and we also have our main office and our corporate office, which is both for American Mortgages and Global Mortgage Group in Singapore. Our contact information is on the right. So if you want to scan that, that will bring up all the contacts. Also, again, in the chat, there are links to both American Mortgages and Steadily if you would like to schedule an appointment. So we will go into the chat and we will answer some questions. So I will start off. I'll read the questions, and then if you have any questions that are relating to Steadily Insurance, we'll get those answered, and then anything related to mortgages, I will answer as well. So, okay, so let's get to the questions.
We're in the Q&A, questions and answers box.
Yeah,
right?
we're in the Q&A section. So I'll read the questions, Lucas, and then if it's directed to you, I'll ask you to answer. If it's directed to me, then I'll answer it. And a lot of times, maybe it even be for both of us. So first question is, does my insurance policy provide coverage for wear and tear? Oh, good question.
That is a great question. And the answer to that question, 99% of the time, is no. Wear and tear would be something that would be covered by like a home warranty plan. So again, like we discussed during the slides, it would be like if your AC or your HVAC unit breaks down because it's old, then that's something that's considered wear and tear. Or if your roof is 30 years old and it's very worn down and you need to get it replaced, that's something that would be considered wear and tear. So those things would not be covered on your dwelling insurance policy.
Okay, next question. If the tenant leaves a property in an unfavorable condition, is that covered under a steadily insurance policy?
Tenant leaving the property in an unfavorable condition on any dwelling or landlord insurance policy, 99% of the time would not be covered, right? When we rent out the property and we have a lease agreement in place with our tenants, we also are taking security deposits for issues. So if the tenant leaves it unfavorable, they didn't take care of it, and you have to go in there and fix up what they left a mess, then that's something that we would keep the security deposit, and then anything after that, we would most likely have to go directly to the tenant and try to collect the rest.
Okay. Would you recommend investors to purchase extra insurance policy on top of the standard policy for acts of God, like storm damage, etc.?
I would not. A special form DP3 policy is, and I'm speaking to you not only as an insurance agent, but also as an investor. Special form DP3 policies have a lot of coverage for things like acts of God, like storm damages or anything that's weather related, storm related, tornado, hurricane, tropical storms. That would all be covered under your special form DP3 policy. You would not need another policy to help you protect that.
I think what makes the U.S. Unique as well. This is not a question. This is just something I'm adding. Is in most countries, when you get a mortgage, you're required to buy life insurance on that policy. The U.S. does not have that. But do you recommend something like that, or is that something possible that people should consider, especially if they're buying investment properties with the intention of passing these properties down to family members at some point?
For that purpose, yes. I mean, I'm a stickler for exposure, right? So the more liability, the more protection, the better. So I'm never not going to say no to that. So any more protection that we can absolutely get to protect our investment, our assets, I would absolutely agree with and say yes, I would do that.
Okay, perfect. Next question. Hi, Lucas. Does my insurance policy also provide property and liability protection for my tenant?
And the answer to that question, straightforward, is no. Your tenant has no insurable interest in the property, right? So you are the owner. So that policy is meant to protect you as the owner. And that's why it's always a good rule of thumb that when you're going to rent out the property to a tenant, is as part of your lease agreement or your lease requirement, is to have them get renter's insurance. Renter's insurance is what provides your tenant with the liability protection that they need. And the property itself would only be their personal belongings. So that would be their own personal belongings that would be covered under the renter's insurance.
Okay, great answer. Next question. Can you add the URL in the chat for the ambassador program? Sure, we absolutely will. Next question. How long is the pre-approval letter, and how long is a pre-approval letter good for? In general, once you submit all your documents and we issue the pre-approval letter, that pre-approval letter is good for 60 days. As long as your financial situation doesn't change or the loan program that we put you in doesn't change, the letter is pretty good for a long time. Normally, when you are going to put an offer in on a property, the realtor representing you, and we can also refer you to vetted realtors, much like Steadily, in all 50 states. So the realtor that is referring you will want the letter to be specific for that property, just so the seller's agent can kind of see that it's not sort of a blanket offer that's being thrown out all over the place. But we have a 60-day expiration of that letter. So you just may want to get it renewed, or if it's for a specific property, get it made to that property. Next question. Are there restrictions on the number of properties that we can mortgage and finance for? Technically, no. As long as the properties qualify or you qualify as the investor, you can buy one or 1,000 properties. We do have portfolio loans, meaning that you can buy multiple properties at one time or refinance multiple properties into one loan. Makes the administration of this to be much easier. As an example, we have a client living in Asia that has over 400 units in one city. Can you imagine the administrative nightmare of having to write out 400 checks? So he just chooses to do, I think it's per 100 properties, but absolutely. And the great thing is, unlike most countries, there are no restrictions on the loan to value. So you can have one property at 75% or 80% loan to value, or you can have 100. There's no limitations or restrictions. Any issue with purchasing a couple of low value properties that would total similar amount of $200,000? Unfortunately, yes. So if you're going to buy an individual property, there needs to be a minimum purchase price of $200,000. If you're going to buy multiple properties, and this would be 5 or more properties, you could probably go down as low as $100,000 per property and do it in a portfolio loan. If you'd like more information, it's probably better to talk to one of our portfolio specialists, and they can kind of explain the process and the minimum requirements for this. But it absolutely is possible. Any special considerations for getting a mortgage on properties in certain states or regions? No. In general, we have loan programs in all 50 states. There are some states that have kind of quirky, issues with them. But what makes, again, the U.S. unique, especially if you kind of look at global investing now, for one, there's no stamp duties. So you're not going to be paying, a premium to the government in order to be able to buy a property. And there's really no restrictions on foreigners buying in any location. This one is for you, Lucas. Does the landlord insurance always include minimum 6 months lost rent coverage? And maybe you, besides just that question, maybe you can kind of go into what is lost rent coverage and what exactly does that entail?
That's a great question. Yeah. So landlord insurance typically offers 12-month loss of rent coverage, 99% of the time, unless the investor or the insured, which would be the owner, wants to exclude loss of rent coverage. Before we go into what loss of rent is, I can say that if you do have a mortgage you're going through a mortgage company, you have a mortgage 10 out of 10 times for an investment property, you're going to need loss of rent coverage, rental income coverage, and you also need replacement cost on your house when you are working with a mortgage. Loss of rent coverage basically means, so let's say if you were renting out the home for $2,000 a month, right? So now let's say 6 months later, your tenant decides has a kitchen fire, accidental, and it's not livable. Your tenant has to leave the house because it's not livable. You filed a claim and the house needs to be repaired. Well, if the tenant's not living there, well, you're not collecting rent. And if you're not collecting rent, you're not collecting rental income. And this is where this comes in to replace that. So, and it's up to that amount. So whatever the total amount is times 12, $2,000 a month, that's what the insurance policy will offer you for the year, but it'll give you in the months that the tenant is out of the home. So if it took 3 months to build, to fix the house or to fix the kitchen or whatever it took to get the tenant back in there, then you would get 3 months loss of rent. So if it was $2,000, then the insurance company would give you $6,000 back for loss of rental income.
Okay, very, very, very interesting. Next question: do you require a roof inspection before issuing a policy? This seems very.
That sounds like a Florida question. Florida is my insurance. I mean, I'm appointed in all 50 states, guys, but I am in Florida, and the state of Florida is a whole different animal when it comes to insurance. Most carriers here are going to require a roof inspection on your policy, or in order to get a policy with them. For homes that are 15 years and older, typically for homes that are 15 years and less, then most carriers should not be requiring a roof inspection.
Okay. Another Florida question. Do you cover Florida property where risk of hurricane is high? Isn't that all of
Another
Florida?
great question. Yeah, I think that's yeah, it's all of Florida. So yeah, we do offer, we have not only with Steadily, but Steadily is partnered with maybe over the 20 carriers in Florida right now. And for the person for the individual asking this question, if you have properties in Florida, I think we all know right now that the insurance market here in Florida is an absolute crisis. We're one of the states that's in crisis due to the situations, for many situations. But yes, we do have partners that do offer property insurance, and we're even partnered with the state insurance, which is Florida Citizens, which is nonprofit. And if that has to be the last option, if you can't qualify for any of the other carriers, then we do have Citizens where everyone typically goes as the last option.
Okay, excellent. Next question. Do we always require the wind mitigation inspection and 4-point inspection? If we can't have that, what will happen? This will be an add-on to the premium?
So again, that's another Florida question. Definitely Florida, maybe coastal Louisiana. If the house is 15 years, typical rule of thumb, 15 years or more, then yeah, you're going to need a wind mitigation and 4-point inspection. If you don't have one, there are carriers that will give you a premium or will give you an insurance policy without it. I mean, it still has to be favorable. The roof, everything, the 4-point has to come back favorable. Typically, you would have to go to a specialty market carrier, which Steadily also has in their book, a Lloyd's of London, a Spinnaker Specialty. These are all specialty market carriers that will not require or do not require a wind mitigation or 4-point inspection, and the premiums will typically be higher because you're not providing that. For carriers that do want a wind mitigation or 4-point inspection, one of the main reasons they ask for that, for one, is to make sure that the house is in good condition. There's no issues with the roof or the 4 points. So when you say 4 points, just to explain to everyone, the wind mitigation is a full inspection report about the roof. That's it. What the roof is, how long, when it was replaced, what it was built with, how it was attached to the dwelling. That's your wind mitigation. 4-point is the 4 points of the house, right? So it's everything else. How old is your HVAC, your water heater, your AC unit, what kind of wiring you have, electrical in the house, things like that. For carriers that do require the wind mitigation and a 4-point, if it's favorable, you do get some pretty good discounts with wind mitigation, especially if you have hurricane-related discounts on that wind mitigation inspection report.
Okay, super interesting. I wasn't even aware of that. So great question. Next question, which came from Facebook Live. This would be for me. Do you do credit checks in other countries for individual borrowers versus LLC? We require you to provide your foreign credit report if available. In some countries, we obviously realize that there is no credit reporting agency. That's fine. There are ways to get around it. The actual score on your credit is not going to be looked at like it's looked at in your home country. Certainly, we don't want to see bankruptcies and so forth, or recent, bad issues. But all we're really looking at by asking for a foreign credit report is, do you maintain U.S. credit, and are you responsible with your U.S. credit? I mean, with your foreign credit. That's quite different. When it comes to individual borrowers, LLC, it's basically the same thing, as all of these loans will require someone to be the borrower, but the entity itself can be held, the property itself can be held in an entity like an LLC. Next question. Would your program allow loan mortgages against a U.S. property to finance a property purchase in other countries? And does it apply to commercial properties or just residential? Very good question, and something that we get on a regular basis. Again, because all of our clients are living somewhere abroad, a lot of people think, and this is also vice versa, they think that they can get, say, a Norwegian mortgage to buy a U.S. property, or a U.S. mortgage to buy a Norwegian property. Unfortunately, it's always onshore. So, but what we do recommend is, if you're looking to buy a property in a country where maybe mortgage financing is very difficult, or if interest rates are high, you could always remortgage your U.S. property, pull the cash out, and then use it as a cash purchase. So to answer your question, no, that's unfortunately not possible. I think that is everything, Lucas. So Lucas,
Yeah.
thank you very much for your time. Thank you for steadily being a fantastic partner for American Mortgages. We really appreciate it. And if anybody, again, would like to speak to anybody at Steadily or anybody at American Mortgages, there are links in the chat. You can click on it and you can schedule an appointment. So Lucas, do you have any final parting words or anything you'd like to say before we sign off?
And the feeling is mutual with Steadily and American Mortgages, just so you know, that partnership we really appreciate. Final words is, here at Steadily, guys, we really care about your investment property. I know I do, and all the agents that are under me do. So it's always going to be about exposure. We want to look out for your best interest. And when you start buying your investment properties and you come to us, we're always going to discuss everything, give you all the knowledge that's needed to make sure that you're protected. And then once you get that knowledge, we can come to an educated decision together to make sure that your properties are insured the right way.
Excellent. Okay, thank you everybody for your time. We sincerely appreciate it. We will be having a next webinar, which will be discussing properties in Southern California. So it might be something very interesting if anybody is looking at eventually purchasing California property, or looking to pull cash out from your existing California properties. Lucas, thank you. Thank you to everybody, and we will see you next time. All right, bye.
Have a great evening.